And then on Wednesday, MBS were down 6 basis points in the morning. Bonds began the overnight session at unchanged levels and held close there through 4 a.m. Eastern Time. EU bonds rallied and faded over the next 4 hours, pulling treasuries along for the ride by 8 a.m. 10-year yield was almost perfectly unchanged. Starting around 8:15, bonds began losing ground for reasons kind of unknown. The most likely suspect is a headline regarding the sale of some of Signature Bank's assets that came out a few minutes prior. Stocks rose with U.S. index futures as a rally in Chinese tech shares boosted sentiment, and concern about contagion from banking turmoil continues to wane. Consumer confidence improved slightly in March, according to the Conference Bureau. Surprisingly, the bank failures didn't have much of an impact, and the survey was conducted about 10 days after the failure of Silicon Valley Bank. The latest results also reveal that their expectations for inflation over the next 12 months remains elevated at 6.3%. Overall purchasing plans for appliances continued to soften, while automobile purchases saw a slight increase. That inflationary expectation number for the next 12 months is not good. We know the Fed pays close attention to inflation expectations in the consumer confidence surveys because it gets baked into the cake with wage negotiations. 6.3 number does seem pretty far from the 3.8 number we saw from the University of Michigan survey earlier this month. There are only 578,000 active home listings nationwide. That's out of 142 million housing units. So inventory stays low, which is helping keep values up for the time being. Another boring yet resilient day all the way around. After the past few weeks, boring trading days aren't necessarily unwelcome though. Their only real downside is that there's not much to say about them. Bonds are waiting for one of three things, or more of three things: more banking drama, economic reports that flesh out the inflation picture, or other news about financial turmoil. At the end of the day, we are up 13 basis points, ending up at 100.78, which now has us in the upward bounds of this very narrow range that is set by the blue line, which is a Fibonacci R2 retracement at 101.125, and the red line at 100.758.